Hey everybody, Chris Bober here. I'm an associate broker and leader of Team Bober with Nebraska Realty. And today I wanted to check in with you and give you what I call the State of the Union. Just like the President of the United States gave a State of the Union this week, I wanted to kind of do the same thing when it pertains to the Omaha real estate market. And the reason I think giving out these statistics and showing what's happening in the real estate market is so important is because right now there's a lot of perceptions going on, whether it's in the media, whether it's on social media, or whether it's just information you're reading in the newspaper or just hearing by word of mouth. So many times people will take a general statement and apply it to the entire industry. And today I wanted to break down some of the statistics of what's going on in our market so that you can be educated as you apply your knowledge to the real estate market when you make decisions. And what you'll see today is that statistics tell a story. And they can tell a story a lot of different ways. But today I'm going to try to help you interpret some of the statistics of what's happened in the past and maybe apply it to what's maybe going to happen in the future, in the very near future, so that we know kind of what we're up against in this market. So first of all, I wanted to show you just Omaha area Board of Realtors. They pull statistics every month. And they compile them, and this is through our MLS. Of course, there's stuff outside of this, but most of the real estate sales happened in Omaha in the MLS. And what you'll see in what I'm going to show you today is the stats from January of this year, January of this year versus January of last year. And you can see there's a dramatic change here. And January is typically one of the lowest months of the year when it comes to inventory, when it comes to number of sales, but it still gives you kind of a floor of the market of what's going on. So as you look at these statistics, the top statistic is the one that jumps out the most. The number of on market as of the poll day, which was the end of January, that's the most recent statistics we have. As you can see, we're down 23% for number of listings from January of 2016 to January 2017. It's a problem we've been talking about here for a while. It's a lack of inventory, and we don't really have a solution for it, especially in the existing market. People are selling houses as they need, but the buyer demand is so much stronger. So houses are selling really, really fast. And I'll show you some statistics to kind of define that a little bit, but as you can see, we have a severe shortage of inventory. And I'll tell you, February got a little bit better, but it's not much. We are still way below. In fact, I would say February is right on par with how January ended. Only 1,865 properties averaged on the market during that time. That's down 23%. Number under contract, you can see that's down 6%. So while there's less stuff being sold, there's less stuff being on the market, but still a lot of good sales are going out there. The number closed as far as volume goes, it's down 5%. However, the number of volume closed in dollar amount stayed the same. So we've had significantly less sales, significantly less opportunities to sell, but properties probably on average are higher, so you're getting the same amount overall. And if you look at it, the new sale price from last year has gone up 17%. So if you're going to build a house in January of 2016 to January 2017, you're paying 17% more for the same house. That's pretty crazy. That's kind of hard to swallow for a lot of people, which I think is why we're trying to see a gap between affordable housing. Also, you'll see when it comes to existing sale price, that's up 8%. It was 146, now it's 158. That's a pretty big jump. 8% in 1 year is a really, really good year for real estate appreciation. I don't think you can sustain that sort of level every year. And as you can see, 17%, 8%, the value of real estate is going up. So real estate still is a good investment. As we look to maybe some drill down into the market a little bit more, we're very fortunate here at Nebraska Realty that Andy and Nebraska Realty provide such great statistics for us. And if you look at these statistics they put together, and they put them in a format that's really easy to read and understand, what you'll see is the cycle and the seasonality of the real estate market. Of course, it peaks in May and June. The spring market in this area right here, these is when they're closing. So that's why you see the most amount of closings, and you've seen 2016 is the bar graph, and the lines represent the previous 3 years. Holding steady kind of all the way around. Everything's pretty similar. Every year it seems to kind of go up, which is just indicative of coming out of the recession and more people being in the market. But right now, the low here in January, as you can see, January is the lowest month of the year, so we should expect a pretty steep climb going into the spring. But this is kind of what to expect, this timeline, this graph, when it comes to the market going into the spring and summer. levels off a little bit, kind of goes down towards the end of the year. But that's 2016. If you look, that there's a 4.2% increase in annual closings from 2014 to 2016. So more properties were sold last year than the year before, and that was a record. So we're continuing to set records, and we're kind of waiting to see whether or not that record mentality kind of holds up this year. As we look down and drill into it a little bit more, you can see where the market kind of lies and how many people are using the market. This here is the entire real estate market in Omaha in 2016. And the orange here that's being represented is sales between 100,000 and 250,000. As you can see, that makes up 60% of the marketplace. So many times you see these big fancy houses, really high dollar, think that they're driving our market. It's not. It's the average sales. It's anything between 100 and 250. The average Joe and Jane who are buying and selling houses that make up the majority of this market. You can see 250 to 500, that's a number that's grown, that's 23%. And then below 100 is 14 here, which is a pretty good number. And then once you get 500,000, it's only 3%. Once you get above $1 million, it doesn't even show up in the graph. That's how few $1 million sales there are in Omaha. Over here you look, average actives, 2,500 average active on the market in 2016. That's down from 2015. Of course, pending was about the same, and average close per month actually went up. So less inventory, more sales, which means now there's fewer properties left over right now. So break it down a little bit more. Again, another great graph here to show the average sale price is $204,000. So right now in Omaha, the average sale price is $204,000, but the average median price is $172,000. Median is towards the middle of all of the statistics. It's just the middle of it, not the average. So as you can see, there's way more below 204 than there are above it, which is why the median is lower. But you can see from 2013, 14, 15, and 16, the sale price is pretty much a straight line. So we could probably expect that trend to continue, the straight line to continue to go up. This year, it's going to go up again. So especially with low inventory, this is the trend we're headed on right now. Breaking down the sales more, you can see that existing and new construction have gone up every year. These are the numbers that correlate to the graph over there. Average price, average sale, things like that. Those are great statistics to look at. This is a statistic that really kind of blows my mind here, if you can kind of understand what's happening and when it comes to expectations of buying and purchasing of real estate. So this is the absorption rate. The absorption rate is the rate at which the available homes are sold in a specific real estate market during a given time period. So basically, this is how much inventory we have. And they rate it in terms, or they measure it in terms of time. So if you look at it right here, in 2016, remember, we're lower than 2016. In 2016, if you had a house between 100 and 250,000, the average time on the market was less than a month because there was less than a month's worth of supply. The demand was eaten up so much that you shouldn't expect that to be on the market for more than a month on average. And of course, 100,000 was a little higher. 250 to 500, 2.6 months of inventory on average. 500 to $1 million, 5.6 months of inventory. And then $1 million, 17.7 months of inventory, which means that it's not an exact science, but this is kind of the average time it took to sell real estate in these price points in 2016. So you can see a sharp contrast in properties that are priced well at 100, 250 go like that. Properties that are $1 million, even if they're priced right, the market is so small for those, it takes almost 2 years to sell them, a year and a half on average. So you can't apply this fast-moving market to every price point, because as you can see, these $500 and $1 million sales just aren't happening as fast. So I think that's good information to show. And again, I'm going to share all this stuff for everyone. After I get done with this, I'll post a link to this. The Omaha Board of Realtors and Nebraska Realty has great resources for this. I'll share those with you. So looking at kind of the average time on market, this is, again, a lot of people want to know when they put their house on the market, what's the average time on market? How long do I expect it takes to sell my house, or how fast do I have to move to get something going? So things are moving really fast in a lot of ranges, but if you can look at right here, the average median days on market, 100,000 is 44. That's time from it's listed till it's closed. So it takes about 4 to 6 weeks for escrow to happen. So you can tell it's happening pretty fast. 25 days on market, 43 days on market. You see it just continues to go up the higher the price range is. So Nebraska Realty, we continue to lead the market in days on market. We average 23 days on market with a median of 9, and then 33 days on market with a median of 11 is the rest of the market. So I did want to be clear. these are times on market, not escrow. I take that back. I misspoke there. But you can see these are still shorter than average. You know, if you look at a real estate market 5, 6, 7 years ago, you're looking at between 3 and 6 months that it took to sell a house. Now we're talking about less than a month in a lot of categories. So stuff's moving really, really fast, and there's your statistics to show it. Here again, Nebraska Realty, just kind of bragging on us a little bit. We sold a house every 2.5 hours. We did over $500 million worth of real estate transactions last year, 678,000. We do a lot of sellers and buyers, a little bit of both. It's kind of even. So our volume has grown 86% since 2013 and 58% since 2014. 30, 55, 50. We're on a trend going up too at our company. That's some of the share. So to break down the statistics a little bit more, and this is a 20-year graph. This is put out by the Board of Realtors here in Omaha that shows the sales, average sale price, and the availability of homes that are on the market. Now this is a pretty shocking graphic here. If you look at it, this is the average sale price of existing homes over 20 years. This is the average sale price of new construction homes over the last 20 years. You can see there was a peak in 05 and 06. We experienced a recession. Some builders went out of business, lower market. They went down for a while, now they're back up. But both of these, over time, have increased in value. What's crazy about this, and I don't know how well this is going to show up on the video, but here is the trend line when it comes to the availability of homes that are on the market, right? So this is 2,000. The floor on this is 2,000. So right, 2,000 homes in the market is the floor. We're under that right now, if you can imagine it. Back in the late 90s, it was low. Then all of a sudden, there's a lot of houses for sale, a lot of houses being built, a lot of people selling, feeling good. It went back down a little bit, went back up in 11. Then steadily, that even though the price of houses has gone up, the availability of houses has gone down. That's an enormous gap over those things going up and this thing going down. At some point, they got to start trending back towards each other. So this is a great statistic they put out, 20-year trend line showing that we are way down in inventory, but way up in price. A couple more graphs to look at. This is the number of residential sales versus the average interest rate. Okay, and of course there's people who qualify higher and lower, but we hit a high within the last 20 years at a little over 8% back in 2000. And if you go back farther than that, it was really higher than that. But that's the interest rates. That's the amount of interest you pay every year on your mortgage. That has steadily gone down. And there's a kind of a happy middle point here in the mid-2000s. Then we had our recession and the whole mortgage crisis. Inventory went up. Sales went up while interest rates went down, which is pretty normal. But interest rates still, you look right here, we are averaging below 4% right now. I had clients who closed the other day, they were 3.75%. Interest rates are still really, really good. Money's still cheap and available while the number of sales have gone up. So they predict the interest rates are going to go up slightly and continue to kind of go up. Sales are supporting that, though. They should be able to handle it. To continue to work down this trend, this is the last kind of chart I want to show. This is a statistical analysis done by UNO. UNO, some professors out of UNO, they took the time to analyze over the last, I think, 16 years, from 2000 to 2016. And they did this a little different than sales statistics. They went through appraisal statistics. So I think they pulled a bunch of appraisal data from the county assessor, and they're going to give you just raw data on how properties appraise when they sell. And if you go and have a mortgage, that property has to appraise and then lend up the appraised value. Well, that gets recorded. That's what they're measuring here. So as you can see, in the Omaha area, since 2016, the average appraisal price went up 29%. The median is 43. Again, that's the middle of all the statistics. So that shows you that a lot of them doubled and tripled in value. I mean, they went up a lot. Douglas County went up 27. Sarpy County, a big player, they have really, really grown. 34%, but the median is 58. Sarpy County is going through the roof, and they have in the last 15 years. The suburbs obviously are up. Douglas County, they do get into some school districts here, maybe a little bit. And you can see, it might be a little surprised to see that some of these have gone up. South Omaha has gone up. North Omaha, if you're looking maybe for some investment, North Omaha valuations are down from 15 years ago. So if you had a house in 2000 and you have a house now, statistic-wise, you're 7% below value. So maybe there's some opportunities to invest in the area. I know they're putting some money out there trying to revitalize some of those areas out there too. So break it down even a little bit more. This is the existing home price appreciation for the entire metro and then some counties, okay? Again, it follows a trend. We've seen this before. It kind of matches up with the graphs that we showed before. it's gone up, kind of leveled out, then bottomed out over here. Again, some of these are affected by a lot of foreclosures.